All right, so we are going to start our lecture over billing and collections. I know on the schedule it says page 997, I think, but I actually was reviewing the chapter and I'm going to go back to 989. I just want to touch on a few things. So accounts receivable is the money that we receive from patients, meaning when we're looking at these definitions, accounts receivable is always money coming into the practice as when we are receiving this money. Accounts payable is something that is going out. The practice is paying this money out in order for it to function. So, when push comes to shove, we are definitely providing patient care, and that's our primary responsibility. But if we're not receiving money, then we won't be able to thrive as a practice. So while we always want to help people out and do as much as we can, we still have to have money coming in so we can have lights on, we can pay people to come into work, we can have electricity to run the office. All of those things are still very important. So when we're talking about accounts receivable, we have to make sure that what we're getting in is accurate, making sure we're not missing out on any money. And usually the front office assistant will take care of this. So I'm starting right here on accounts receivable. I guess I can highlight it. Okay. So here's an example of what it will look like in a ledger, patient ledger. It's showing here Patricia Abbott had a filling on tooth number 3. It was a 3-surface amalgam. The amount was $122, and this is the provider that did it. She still owes $122 on this. So we're charging, and then we received a payment for $610 from her insurance. Oh, I'm sorry. No, this is when they were running the invoice. So they batched it for $610. Then when the insurance comes in, they will apply the payment to that. But again, that's not usually anything that the dental assistant does. Okay, so in the dental office, there's a fee schedule that is determined, that is used to determine what the patients are charged. This is called the usual, customary, and reasonable fee. Need to make sure that we know that. I don't like that color. Let's do this. Make sure you're aware of that definition. So this is actually 3 definitions in one. So usual, customary, and reasonable, but it says UCR fee. So how they determine it is the usual fee refers to the fee that is typically charged by a dentist for that procedure. Okay. So the usual fees means like that's just what is charged. The customary fee is the average fee up to the 90th percent that the dentists in the area charge for the same procedure. And then the reasonable fee is the mid-range of fees charged for that same procedure. So for example, if a procedure is difficult, then the usual fee might be raised to reflect the difficulty of the case. This is the tricky part, and this is where write-offs and things come in. It says, however, if a dentist feels that he or she would like to charge a greater amount for a service, insurance companies will not pay above the usual, customary, and reasonable fee schedule. Therefore, the patient will be billed for the overage unless the dentist is contracted with the insurance company and has agreed to accept their payment as payment in full. So that is how some patients are like, oh no, my insurance is going to cover it. Well, maybe, okay, not all the time. Depends on the case. Patients can and may question the additional charges and become upset if it hasn't been previously discussed. So that's why it's always important to go over the financials 100%, because when it comes to billing, people get very, very edgy. They don't like it. They don't like to talk about money. It's uncomfortable because dentistry is expensive. Most dentists will stay within these fee ranges, but the UCR fee schedule is reviewed annually and adjusted, so it can go up or down. Dentists also have the right to adjust fees by means of a professional courtesy. So this might be offered to other dentists for dental work, or maybe employees, friends, and family, meaning that might be a benefit of you working there. They also have the discretion to make any adjustments if they want to. So they have the authorization and the discretion to make any write-offs if they want, or just do stuff for free or whatever. They're in complete control. There are some times when they can't do that, or they're required to give write-offs. It goes both ways. So dentists who accept assignments in specific programs agree to accept payment in full by the insurance company. And one of these example is Medicaid. Okay. So for instance, if a patient is covered on a program and the dentist does a restoration for this patient at a fee of $75, but the insurance company only pays $55, he has to adjust or waive or write off the remaining $20 fee. The patient is not responsible for it. Okay. So again, if a patient, for example, the one I'm familiar with is Medicaid. If a doctor accepts Medicaid, they're going to write off whatever the difference is because we are legally not able to charge that patient for the difference because they're a program that they've agreed to accept. This can only be done if the insurance company pays a flat fee. If your insurance company pays a percentage and a discount is given, it must be given to the insurance company too. For example, if an insurance company pays 80% for a restoration, the dentist should not take the 80% and then adjust or write off the 20% balance. Dental team members must be aware that the practice cannot survive if constant adjustments to the fees are made. So sometimes production must be balanced by other cases that meet regular fees to maintain the viable practice. Again, that's very important that we have money coming in. We can't just write off everything so nobody ever gets upset. It's not realistic. Every time the patient comes into the office, we're going to have some sort of entry into the system, meaning we'll charge an office visit or whatever the code is. So there will always be those fees that are associated with those visits. We can definitely override them like we've talked about, but so we would post a charge and then you would post an override. That doesn't usually happen though. Usually we would just bill the insurance. So ideally every patient should pay for dental treatment that they receive on that day. However, I mean, ideally, yeah, but that's not always how it goes. We have to wait to hear from the insurance company. We have to wait for payment to be processed to make sure that the coverage of what was estimated is actually what they pay. So usually it'll take a couple of weeks for that to be figured out. Sometimes they'll say, okay, this is what you're estimated. This is what we estimate that you're going to owe for the day. And then let's say, for example, insurance pays more than they thought. The office will then have to issue a refund back to the patient. So let's read on that just a little bit, okay? So every time a patient makes a payment or an insurance company makes a payment on behalf of the patient, it must be entered into the ledger. This is done by adding a payment. Once you access the payment screen, either by selecting the name or its icon, you fill in the blanks. Designate how it was made so you can balance your accounts. This is important for when you're putting a deposit into the bank as well. So if a patient pays with a credit card, then you're going to select that. If it was by check, then you're going to enter the check number. So that way it can always be tracked, because here's the case. The one time that you don't actually track it is going to be the one time that that patient has a problem with it, or that one time that the patient's going to ask for a receipt or to show proof or whatever. So you always want to be able to track everything. We never get a cash payment from an insurance company. If payment is from the insurance company, it will either be by check or by electronic transfer of funds, and the option of payment by an insurance company must be specified. So you have to put that clearly. There are even times, guys, where I've worked in a practice and the insurance company, for whatever reason, sends a check to the payer. I'm sorry, to like the person who holds the account. So then they have to, those people usually will get the check and they won't say anything to the dentist office. They just cash it. Oh, I don't know what this check's for. They cash it, they blow it, they spend whatever on it. And then they're like, they get a bill in the mail from the dentist office and they're like, hey, why am I getting this bill? Well, you're getting this bill because they sent the check to you. So now you have to pay us. So then they get all in a huff about it or whatever, because they're like, oh, I didn't know that's what that was for or whatever. And it's unfortunate, but sometimes that's what happens. So then you have to deal with them on payment arrangements, or you have to, figure out how you're going to get the money from them because the insurance company sent it to the wrong people. So due to the way we bill, very few people pay in cash. It's usually large quantities or fees. So that people don't usually carry that kind of cash around. It's usually a credit card, some sort of check. So if somebody is, or through insurance. So if someone is paying in cash, some offices will offer a discount to someone who pays cash in advance, including checks, for the entire treatment. That is to encourage patients to just pay for it and get it taken care of. It decreases the fees and the time and the possibility of things being overlooked. So if a patient pays in cash, it's important to give a written receipt showing the payment on the account for sure, guys, because cash cannot be tracked. The majority of patients will usually pay for their dental services with a personal check or a card. Okay. I think a lot of times they'll use checks just so they can track it. But sometimes they're going to require that you put a driver's license number on the check and another form of ID with the check, because a lot of people will try and use fake checks. This is also to make sure that if it bounces or comes back, that we have proof that you are who you said you are. I don't know how old you guys are, but I remember anytime when I first started having my own bank account, my own checks, I remember that they would always ask for your driver's license and they would put like a cross on it, like a grid. And then in one corner, they would write your driver's license number, the state that your driver's license was issued, your date of birth, and something else. And then I think it was just their initials showing they were the ones that took down the information. But it was like a verification process. So if the check ever bounced or came back, they could come after you in a different way to get their money. That was also as if there was a criminal proceeding that needed to happen, that they would have the information that they needed. Some people take offense to that because it's kind of like, what, you don't trust me? But anybody that's on the up and the up wouldn't worry about it. So sometimes the dentist will be like, no, they're fine, I know who they are, and just kind of override it. But typically we'll ask for some proof of identification. A cashier's check is guaranteed by the bank. So that's not usually one that we worry about getting identification for. Traveler's checks might be used for out of town patients. It's safer than using cash when people are traveling, especially if they're traveling abroad. You might see this. These checks are written for a specific denomination. It's usually 20, 50, 100, and they will have to have a signature from the user that matches the one on the check at the time that they use it. So it can't be some random signature showing up. Certified check is this. You don't see these very often. You don't see traveler's checks either very often, but it's still a possibility. Certified check is the one that the bank is verified as good for the amount that's indicated. But like I said, not very common, but they're still out there. A lot of patients will use credit cards to pay for their services. That's the most common, especially with debit cards. The office typically takes the card and has a card reader. They'll swipe or insert the chip on the card. Back in the day, they used to have like a metal board or like slab, and they would put like a receipt on there. They would write for how much it was. Person would give them their card, and then you would like swipe this thing over the top of it, and it would scrape the top of the card onto the paper, and then it would make a copy of their card information. So then they could send a copy of this to the credit card company for it to be processed, and so we could get paid. Now it goes much faster. Obviously, it's instant. But I remember those days. I don't know how old you guys are, but I remember those days. But now it's just done all in the computer. Always, always, always give a receipt. Ask if they want it printed or emailed, no matter what type of payment that we're taking. Bank deposits. Every day, well, usually every day, you're going to take any payments, and they're going to be deposited into the bank every day. So they stop by, they have those bags, they drop the bag in the thing, they process it. Cash is separate, checks are separate. They're all stamped and ready to go. Okay, taking it to the bank for deposit. Most offices have restrictive endorsement stamps that say for deposit only. This protects the office if it's stolen or lost, which is huge because we deal with some large quantity checks sometimes. Usually, the deposit slips used to be handwritten, meaning you'd have to handwrite every check and deposit slip amount that are on the deposit slip that was being deposited, and then a total. But now that most computer softwares do this automatically, this just depends on the day's entries. They can pull a report once they close the books for the day. You obviously have to make sure it matches. You don't just assume. You still have to count everything and make sure everything matches, but it's easier than having to write it all down. For monthly billing, it's very expensive and time consuming. So it's better if patients pay at the time of service rather than having to get a bill later on. You got to think about it. If we have 1,000, let's just say 1,000 patients in the practice, and we see 200 of them that month, okay? But it's 200 every month, let's just say. So every 6 months, I don't know. Let's see here. Let's say we have 18, let's for simplicity, let's say we have 1,800 patients in the practice, and we see every single patient every 6 months. So that's 1,800 times 2. Let me get my calculator here. Okay, 1,800 times 2. It's 3,600, right? Okay, so let's just say none of them pay cash up front. That means we have to send billing statements out twice a year. So that, again, that's 3,600 times twice a year for monthly, assuming everybody pays on time. Okay. It takes, let's say, 10 cents every single time we send out a paper statement, and that's just to print for the paper and the envelope and the ink. Okay. Plus then another 40 cents for the stamp. So that's 60 cents. Let's see, 50 cents per patient. So let's do times 0.50. That's $1,800. Okay. Just to send out statements for the month. That's a lot. And that's a lot. I mean, that's $1,800 of profit that it could have been. Now, this is assuming everybody gets a paper statement. You know, with these days, a lot of people get electronic statements and things like that. So it's not necessarily as expensive, but not everybody is. Not, you know, sometimes you still get paper statements. So they sometimes have to be sent. Hopefully, ideally, patients are just paying right up front, so you don't have to worry about it. But the computer will definitely generate monthly statements from the ledger and the database with an age analysis of the balance. It'll tell you what's 30 days late, what's 60 days late, 90, over 120. And then it breaks it down like that, showing like, okay, so we didn't pay. Okay. A lot of times when you're sending out paper statements, you're going to include a return envelope to help the patient send in the payment, meaning, okay, we got it all for you. Just put your money in the envelope and drop it in the mail. Doesn't get much easier than that, right? So they're breaking it down here a little bit different here, but if your cost of sending a statement is $3, sending out a statement asking for a payment of $1 would be inefficient because you're spending more to send the statement than you are of what it cost. They also received a walkout statement when they left the office, so that's another expense. If a patient has insurance, those accounts are not sent statements until the insurance is paid and the balance is actually owed. So again, we don't want to send a balance on a statement when their insurance hasn't even paid yet. So that's why you have to kind of go through them one by one before you print them, and only send them out when it's absolutely necessary and not just for informative purposes. Sometimes when you are working in an office that has more expensive dental treatment, as in a full mouth reconstruction, some major debridement, some flap surgery, like these large expensive dental treatments that are going to happen, it helps to help with payment plans. We need to offer our patients several payment options if that's the type of practice that we are. Otherwise, patients are going to have a hard time. You're not going to have a thriving practice if you don't opt. I mean, not many people have thousands and thousands and thousands of dollars just laying around and be like, all right, here you go. So when the treatment is diagnosed, the front desk assistant or dental office manager is going to set up a financial arrangement. Often they'll require some sort of down payment because we have to have the supplies. We're setting aside specific time with the doctor. This is to help make sure that the patient is invested. So an often initial down payment is requested when the treatment is done. The balance is then divided and fixed over an arranged time frame. So for example, they list an example here. A patient might have $1,000 worth of dentistry to complete. The office might say, hey, pay 20% down, and then $800 being paid in $200 increments over the next 4 months. And so this way it's a win-win. We get you on the schedule. We're able to help you out, but yet we're also taking care of our practice as well. So that's a win-win. Usually they'll require some sort of like automatic withdrawal. They have to set up an auto withdrawal if they're going to do that. It's like a contract that they sign to say, hey, I agree you can debit my account for this over this amount of time. So that way it protects everybody. But if the payments extend over 4 months, finance charges can be added to the unpaid balance. The patient must be notified in advance under this Truth in Lending Act. Usually they're not going to do this. This is just kind of, they don't usually do this. But this law, which is designed to protect consumers in credit transactions that require clear disclosure of contract terms and any associated costs be given to the consumer. Usually if you make a payment arrangement, they're not going to charge you interest. If they do, that's something that's always talked about up front. Another payment option is a loan. So these dental and medical loans are definitely popular and usually have no interest. So example of this one would be CareCredit. They're a big popular one. You have to watch out for the terms though. It's amazing. They're like, oh, no interest. Yeah, you can do it and you can use this and it's no interest, don't worry about it. People don't read the fine print. That's not always the case. It's usually no interest if paid in full during that time period of 12 to 18 months or whatever you've agreed upon. So you'll not have to pay any interest as long as you pay it off. Okay, but if you don't pay it off, then it's going to retro date all of that interest, which can end up being almost as much as the actual payment to begin with. So you really have to make sure that they understand so they don't get angry. Some patients also have some of their own banks that they work with already, so they can get loans through them, but they just have to get the correct paperwork. They just have to make sure that, hey, this is actually what you're using the money for. Some offices, and I'm so against this, I don't agree with this at all, but it happens and it's become less and less, but some offices obtain credit reports for patients who have large financial responsibilities for dental treatment. So if it's a large sum of money that the practice is loaning the patient to pay for their treatment, meaning they're giving like a temporary like loan, like we do in-office financing. Okay. There are definitely lab fees and overhead that have to be paid. So we have to make sure that this patient is going to be trusted to pay later on. So this is just another check saying, is this person risky? Are they not? Are they trustworthy? Are they not? But this is, again, not that common. When a patient calls for an appointment, it's important to gather all their information in regard to their dental insurance. So who is the subscriber? It may not be the patient. It might be the husband or the wife. Do they have primary insurance? Do they have secondary insurance? We need a copy of the insurance card. All of these things are super important to be able to give them the correct financial quote. So we also have to have them sign and complete a consent to allow the office to release information to the insurance company and assign the benefit to your office. Sometimes if a patient has been office hopping, you might have to have, like when you call, they'll be like, oh, well, they're already assigned to another practice. So then you have to call and get that released. It's a real pain. Not all insurance companies are like that, but some of them are. Dental insurance. Well, I've heard a lot of people say dental insurance is expensive. I don't personally think it's that expensive. It's usually, I don't know, around $10 a month. To me, that's not super expensive if they pay for 2 cleanings a year, you know, like, or even 1 cleaning a year. It's not that bad. And then you still have, you know, just a copay usually for, it's like $50 copay or something. And then that covers, you know, several fillings or whatever, up to like $1,500, I think is usually what it is. But dental insurance is definitely worth the cost, in my opinion. We, as practices, represent a large portion of the account that dental insurance is a large portion of accounts receivable in the dental practice. Usually, so now these used to have, well, previously the claims used to have to be typed out by hand. So you'd have to make sure it was all 100% accurate, but as long as the patient's account is set up properly, you can generate an insurance claim through the computer and it sends it right out. Okay. Dental insurance seldom covers the entire fee and the patient is usually responsible for the balance. So it's usually like an 80-20 split, just depending on what it is or if there's a downgraded. But here's an example of what a dental claim form looks like. This is a form from the American Dental Association. So this is what it would look like when it's printed out. Statement of actual services. And this one is going to Aetna, which is one of the dental insurance carriers. You have the name of the policy holder or the subscriber. So this may or may not be the same as the patient. Here you can see name of the policyholder subscriber is here. And the policyholder is here. Okay, so it'll show you who we did the services on versus who is covered. I'm sorry, who subscribes. So then you have to have their birth date. Are they male or female? What is their subscription ID? This is their spouse, their plan number. It's Blue Cross Blue Shield. So we're sending it to Aetna with a secondary insurance of Blue Cross Blue Shield. And that they had several fillings done. And it'll say signature on file, signature on file. So this is all done digitally. So the individual who has insurance through the employment or an individual plan is referred to as the subscriber. The patient who is entitled to benefits under any dental plan is referred to the beneficiary. Sometimes they will both have insurance and then they both list each other on the insurance. So they both have secondary insurances. So for example, like it says here, some patients have dental insurance through their employment for themselves and have other coverage through their spouse. They would then be the subscribers. This is important here. They would then be the subscribers for their primary insurance and the beneficiaries for the other dental insurance or secondary. This person is said to have dual coverage and may not have to pay for additional expenses. If two coverages are used, the primary pays the normal fees and the secondary covers the amount owed. Together, they pay the entire bill. Some people don't want to jack around with having to pay any extra fees, so they just pay for two insurances and leave it at that. Okay, so coordination of benefits, COB. This is applies to patients that are eligible for benefits under two carriers, in which the primary pays for part of the allowed amount and the secondary pays for the balance. So for an example here, they show if allowed dental charges were $500 and the primary paid $350, the secondary would only pay $150 regardless of the benefits or what they allow under the second policy. Together, they'll pay 100% of the dental fee. You'll have patients ask you, well, if it covers up to this, can you not cut me a check for the difference, where they're trying to get cash back from that's insurance fraud. Can't do that. Children covered under the dental insurance are referred to as dependents. Healthcare reform matters, and they usually have new rules for medical insurance that may or may not apply separately to dental coverage. So it's good to stay up to date. I know I'm looking for the birthday rule. Hang on here. All right. For children who are eligible under both parents' insurance, benefit payout may be determined by the birthday rule. Under this rule, the carrier for the parent subscriber whose birthday, day and month, come first in the calendar year is the primary for the child. Many insurance plans have identified deductible amount, and this means that a specified amount is deducted from the benefit amount before any benefits are paid. So for example, if the policy has a $100 deductible each year, the individual has to pay that before they become eligible for any benefits. So the birthday rule is important because you're going to have patients calling in to ask questions about that. Some insurance plans also have a maximum amount that can be paid out for the year. So maximum out of pocket or maximum benefit allowed. So this means no matter what the dental treatment is, the plan will not go over a specified amount. Another example. So if insurance plan pays the maximum of $2,000 per year and the patient has 4 crowns costing $800 each for $3,200, they'll still only pay $2,000. So a lot of times patients will do 2 one year and 2 the next to maximize their benefits rather than paying the difference. So the patient would still be responsible for the $1,200 over the $2,000 that their insurance pays. So again, 2 crowns completed each year for 2 years in order to get the most. This usually works out. You're going to have people walking in at the end of the year like, hey, I have $5,000 in my HSA or FSA that I need to spend because I'm about to lose it. Well, that's great, but that's not how it works. You can't just come in and start having all this dental treatment done all of a sudden. You got to we have to have time for it. The capitation program. Dentist or dentists contract with the program's administrator to provide subscribers all the services covered in the program for a payment on a per capita basis. So the per person basis. This means the dentist receives a fixed fee for each patient in the program and is not paid for the specific service. People hate this, offices hate this type of insurance because they lose money. So this type of plan is a health maintenance organization or an HMO. They lose money on it. You might have somebody that only comes in for their cleanings, and that's great. But then the next patient might be somebody who needs 5 crowns and something else, and they're getting paid a flat fee. So It's hard to find dentist offices that like or will take HMO plans. A contract fee schedule is a plan and where the participating dentists agree to accept fees listed under the plan for the total fees. So, for example, the government program Medicaid is a contract fee schedule plan. If they accept Medicaid, they agree to accept the amounts paid by the carriers and don't bill for any remaining amounts because they've accepted, hey, we're going to accept Medicaid. Don't be billing my patients for the extra. You've already say you agree to it. Direct reimbursement plan is the majority. This is where the patient pays the dental treatment fee and is reimbursed by the employer. Those aren't very common. Obviously, it's like a 2-sentence paragraph. It's not very common. The PPO plan is the one that most people have. So under Preferred Provider Organization, or PPO, the insurance company negotiates discounted rates for dental services with the select dentist. If you go outside of the PPO, financial incentives encourage patients to use their providers. They will have increased benefits and prompt payment. In healthcare, we are not required to submit claims for our patients. They do this as a courtesy. Most people are not going to have a ton of money to be paying up front. So to encourage people, they were like, okay, as a courtesy, we will file your insurance for you. I hate it when people, when they tell me that, because it's been this way for so long, it's kind of expected now, meaning you have to accept my insurance. No, they don't. They don't. They do it to be nice, but that doesn't mean you have to say it that way. It's just, again, tactfulness. You don't have to say, oh, I'm doing this as a courtesy. They know. It's okay. Again, this is all pulled from the computer to generate the claim. The American Dental Association has a code on dental procedures to simplify the reporting of these information. Okay, so the current dental technology, CDT codes, are published in the current dental terminology under the ADA's jurisdiction. Every 2 years, they update these codes, and then other codes are deleted. It's a 5-digit system to identify procedures and services. The first code of the letter is D for dental, duh, okay, which distinguishes the codes from the medical ones. So when you're filing a claim, it's like, oh, D, okay, this is a dental because Aetna may have medical and dental. So they need to make sure they get it to the correct department when they're filing the claim. The second digit designates the category of service. So for example, preventative or surgery or orthodontics. The third designates the class of service in the category. And then the fourth is a subclass in service. And the fifth is open for expansion and not used very often. So the code for an adult cleaning is a D1110. So it goes down by the codes, okay? The CD code for a child's cleaning is a D1120. Most of the computers programs that we work with on a regular basis are going to be coded already for you. They're already in there, so you just have to search for them. It's not something you have to have memorized, but knowing what you're looking at and how to read it is helpful. Insurance claims are completed using these ADA claim forms. They have to be filled out completely, but again, are usually just generated through the computer system. The front office assistant is responsible for tracking insurance claims and making sure that the payment is received. A copy of each submitted insurance claim is essential for tracking. So we send one, but we also make sure it's saved into their file. The benefit checks received from the carrier are accompanied with what's called an explanation of benefits, or an EOB. This is a breakdown of the services that were covered. All right, insurance schedule of benefits. So insurance companies may list their schedule of benefits, also known as the schedule or table of allowances. This is a list of specified amounts that the carrier will pay for the service. So it doesn't matter what the dentist decides is his fees, okay? The schedule of benefits is what they will pay. So if they decide to accept that insurance, then that's what they accept. Some dental insurance policies will not pay for orthodontic benefits. I didn't know this until I started in ortho. I'm like, what do you mean they don't cover ortho? Even then they'll have like a lifetime benefit, or it's usually $1,500 or $2,000 if you have really good insurance. But then the patient's responsible for the difference, obviously. Sometimes, unfortunately, we'll have to send someone to collections. No matter how good we are, we give them walkout receipts. We make sure we talk to them. We get copies of everything. We set them on an auto payment. There's always a way that people are going to get out of paying. So despite how well we do for collections, sometimes we just have to send them to a collection company. Okay. Sometimes you'll have past due accounts. So even the best front office still has to collect from people who have past due accounts, and they're not going to like to hear from you. They're going to give you every excuse under the sun as to why they didn't pay it or why they can't pay it. We like to work with these, and they keep paying in small amounts until they're in a better financial state. So as long as they're making an effort and they're communicating with you, most of the time they're going to say to go ahead and, keep working with them. The longer the dental office puts off contacting people, the less chance there is in receiving the payment for the fees. Normally, the dentist is going to be the one who sets the guidelines for patient collections. They do have to be handled carefully and tactfully, because if not, then you're going to make a bunch of people upset. So the best way is to make sure that we're following what's called the Fair Debt Collection Practices Act. These are rules that were set in place by the government to make sure that we are following rules and we're not harassing people. Okay. So this particular act makes it illegal to telephone or call for a debt at inconvenient hours. So that's usually before 8 a.m. or after, I think it's like 9 p.m. or 8 p.m. or something like that. But no dentist office is going to be calling people that late. This also prevents collection calls from being made to the employer, except to verify employment. We can't obtain information through false pretenses or by threatening violence. So we can't call them and make threats. We're going to do this, we're going to do that, or scaring people into paying. That's not how to do it. So calling people is definitely the most effective way to reach them first. Let them know about it, discuss the methods, like, do we need to work out a payment plan? When can we expect payment? But if it doesn't happen at that point, then we have to contact them again, letting them know that we're not letting it slide. Sometimes we have to send out collection letters. If we can't reach them by phone, we'll send out a letter. And this is just to encourage them to pay it yet once again. Here are a few examples on the next page. I'd like you to take a few minutes to read over that just kind of show what a draft might look like. We'll read this one here, December 1st, whatever. Their address. Dear Mr. Cooper, your account with our office is 3 months past due, and you have not responded to our previous request for payment. Please pay your balance of $152 at this time or contact us with an explanation of why you cannot pay. Please call us at whatever if you have a question about your account. Otherwise, we'll expect your payment immediately. Then they sign it as the account manager. These letters are usually not sent certified at first. Once they get extremely delinquent or get kind of out of hand, then they'll be sent certified right before they're getting sent to a collection company. There are certain times where we have to write off balances. Wait, before I say that, sometimes when we send it over to a collection agency, the agency will normally charge 1/3 to 1/2 of the balance that's collected. So that's their collection fee. After the money's collected, the fees are subtracted and the balance is sent to the office. That's a little bit different than the other methods of collections where, like, say, for example, you didn't pay your credit card bill. They will actually purchase it from the credit card company for like pennies on the dollar. And then they will try and reach out to you and get the money, collected. So whatever they can collect is just pure profit for them. There are certain situations where if the patient, for example, is declared bankruptcy, the office will be notified, and then they can no longer send any statements or attempt to collect that debt. They have to write it off. It's written off as a loss. If the patient died or the finances are tied up, a person is designated to execute the deceased individual's estate and oversee payments of the bills. Some people also what's called skip town, and they leave no forwarding address, no information of how to reach them. You'll get usually the statement back in the mail where it says no forwarding address or no longer at this address or whatever it is. That's at that point you can start with a skip tracing process where you search for new information on the internet, try to track them down, and do other methods of searching. Accounts payable are the amount that the practice owes to someone else. Remember, we're talking about from the practice's perspective, meaning this is what the practice has accounts that need to be paid. So this is like Henry Schein billing for supplies or all of the overhead. It's basically all of the overhead that it costs to run the dental practice. So the total accounts receivable is calculated as the gross income. So the money that we receive from our patients who make payments, whether it be insurance or directly from the patients, then we will subtract the accounts payable from the gross income to identify how much the net income is. So net income is the true profit that the practice made after everything is paid. If there's no net income for the dentist, it is not a vital practice and we cannot continue to operate, meaning you will go in the negative. Sometimes, you'll have fluctuations during different times of the year, a month here or there where they don't have net income is sometimes okay because they have things to fall back on. But if you do that regularly, that your office is going to tank. Some office expenses are fixed every month. So mortgage, salaries, utilities, they're there every month. Other ones are variable, meaning supplies, lab costs, because you may go a whole month and not have any lab costs. You may say, hey, I got a great deal on gloves, so I stocked up. Now I don't need to buy them for a couple months or whatever. So those are definitely variable. But all of these things are into play when you're talking about billing and collections and the operation of the practice. I do have a study guide that I'm going to put up for you to go over for this chapter. So you'll have one for the exam. So look for that. Otherwise, that's where we're going to stop for this lecture. It's not the full chapter 40, it's just a portion of it.